Morning everybody, Dwayne Chopper there, DRFX Forex Swing Trading. Today I'm going to take a look at the situation on the US Canadian dollar to identify if there are going to be any trading opportunities for us over the next few days in keeping with our swing trading methodology. Here we can see the wider view of this pair on the daily chart. We can see that since 2012 the pair has been in a very strong uptrend, creating these uptrend lines, these various uptrend lines in the process. Here we see the main long-term uptrend line, which then branched off into two inner uptrend lines as well as an outer uptrend line. On the left-hand side of the chart, you can see that the market rallied sharply before taking a pause and moving sideways and then breaking this first inner uptrend line that carried us down to the second uptrend line where we are now today. Now, given this overall situation, the question now has to be asked whether or not we're going to continue to move bearish to break these other trend lines to continue this overall movement that is now taking place in favor of the Canadian dollar, or if we're going to see a rally that carries us back bullish in favor of the US dollar to continue the overall uptrend of this pair. So let's take a look at what's happening on the more immediate view of this pair. We can see here that the pair has actually started to pull back and rally in response to hitting this trend line. Here we can see that after breaking the range that was formed during that sideways movement, the market formed this downtrend line as well as a small pennant setup in this area here. Now what has been taking place has been a break of the resistance as well as this downtrend line, as the market apparently seems to be looking to resume the overall uptrend of this pair. So looking at this candle is what we call a normal candle, and generally speaking, whenever we have this size candle breaking out of a consolidation boundary, it usually leads to profitable breakouts. However, there's another aspect of this breakout that will make it a little less likely that the market will indeed rally and provide a valuable trading opportunity for us. And that aspect is in the trading methodology, and I'm sure you're familiar with it. And that is something that holds a key to determine, one of the keys in determining whether or not you're going to have a successful breakout or a breakout that leads to a sideways movement and volatility that ultimately reverses and causes a false breakout. So that is the situation right now taking place on the Canadian dollar. We're starting to see a bullish movement in favor of the US dollar that may lead to a bullish resumption of the overall trend. But right now, there is an aspect of this area here that might prevent that from taking place. So as it is now, I wouldn't be surprised if I see a reversal taking place that would resume the current overall direction, which is a breakout from this range setup. And we could see the market, after reversing here, continue lower towards this outer uptrend line. So a bearish outlook, so a bullish situation right now, but an overall bearish outlook, given the fact that there's an aspect of this breakout that gives it a low probability of leading to a bullish rally. So until then, take care.